It's about that time of day again. My name is Joseph. Already Monday evening, October 23rd. Welcome back to your nightly newsletter. We're covering crude oil, S&P, Nasdaq, gold, and euro this evening. Crude is range-bound and sideways this evening, which tells me to focus on failures, the two-try rule tomorrow. I'm going to fade the breakouts until something breaks up this consolidation. The S&P is bearish and overshooting the low of a channel. Tell me to look for an overshoot back to the opposite side, and I got my eyes in the battle zone for selling opportunities on the Emini tomorrow. Speaking of Emini, how about the Nasdaq? Nasdaq is bearish, but we're sitting on two major support levels, so I'm going to be patient for rotation back to channel high for more reliable selling opportunities on Tuesday. Speaking of Tuesday, gold is bullish with a spike and range pattern going to tomorrow's session, which tells me to use the two-try rule for buying opportunities down below the range tomorrow morning. And of course, tomorrow morning, the euro is bearish, but trading at the bottom of this monthly range. What a beautiful range we've had to work with on the euro over the past few months. We're back here at that monthly range again. It's not a reliable area to sell, so I've marked my battle zone for tomorrow, and I'm staying patient. The key tonight is knowing where not to be trading, right? Isn't that half the battle? Half the battle is knowing where the best trades are going to be, but just as important is knowing where the worst trades are going to be. And the charts tonight, well, we may not know where the best trades are going to be exactly for tomorrow, but I can tell you where the worst trades are going to be and how to stay away from those for tomorrow's session. And of course, I got a great newsletter in store for you guys and gals tonight. The video tonight, plenty of reliable trading opportunities setting up for Tuesday's session. Before we get into charts tonight, I want to remind you the only place to watch the full-length version of this nightly newsletter is here on our blog at sidewaysmarkets.com. If you're watching the video right now on our YouTube channel, not to worry. There's a link in the description of that YouTube video. Follow that link. Come join me here on the blog at Sideways Markets for the full-length version and all 5 markets for all the analysis. While you're here and join the full-length version, don't forget, join the mailing list. Never miss another newsletter. I'll shoot you an email every evening when the newsletter goes live. Just give me your name and email address in the upper left-hand corner, lower left-hand corner. Don't forget to follow me on social. I'm always posting important charts, links, and updates throughout the week. Follow me on whatever your favorite social media channel. And then speaking of charts, how easy is this? I always get such great feedback about this from you guys, so thank you so much. Right where it says click here to download today's charts, how easy is that? All the charts from tonight's video, you can have them on your computer for tomorrow. Right where it says click here to download today's charts, have them ready for tomorrow's session. And speaking of tomorrow's session, you don't get to do this alone. What are you waiting for? Grab that free pass. Come join me as a guest in the trade room this week. You're going to learn so much more with me on that free pass than you will anywhere else on the interwebs. I can pretty much guarantee you that. And of course, don't forget, if you have any questions, I'm always here to help 24/7. Hit me up on live support on the right-hand side of the website. Let's get going. Let's get going. You guys are busy people. I'm a busy guy myself. Got you up for the World Series starting tomorrow. Who you got? Drop me an email. JJ at School Trade. Who are you rooting for? I got to say, I'm having a hard time rooting against the Houston Astros. All they've gone through this year. But I've got to root for the old Dodger Blue, though, being a resident here of Los Angeles. Plus, I think my wife might shank me in the middle of the night if I don't root for the Dodgers, if you know what I'm talking about. Oh, anyways. Back to the plan tonight. Getting ready for the World Series later on this week. A heat wave blowing in here in Los Angeles. Boy, just in time for Halloween. Tomorrow's Tuesday, October the 24th. What do we have here? Get back on track here, Joe. Enough of the funny business. Let's get back on track. Tomorrow, what do we have here for news? Tomorrow, we got peppering here tomorrow morning. 3 a.m., 3:30, 4 a.m. Got the easy lending survey at 4 a.m. as well tomorrow. So 3 o'clock, 3:30, 4 a.m. If you're trading the early bird special tomorrow, if you're trading in London, keep your eyes on 3 o'clock till 4 a.m. Eastern time. If you're with me tomorrow morning in the trade room, we open up at 8 o'clock Eastern time. We're going to trade the strategy with all of our advanced members. We got that CP or that PMI composite flash tomorrow morning at 9:45 a.m. That definitely tells me tomorrow around 10 a.m. Eastern time, we got news at 9:45. Obviously, opening bell on the E-minis at 9:30, 9:45 news, and then we got that 10 o'clock shock right around 10 a.m. tomorrow morning. And so that's probably going to be your big market moving event right around that 9:30 to 10:30 time slot tomorrow morning. Don't forget, trade room, you, me, trading together tomorrow, 8 o'clock Eastern time. I hope to see you there. Let's jump right in. We got crude, S&P, Nasdaq. Nasdaq? Yeah, we'll do some Nasdaq. We'll do some gold, and we'll do some euro tonight. on the newsletter. Starting off with crude oil. Crude is range bound, so my plan is to use range rotation back and forth from high to low, focusing on failures at the highs and lows and staying patient with the 2-try rule tomorrow. Now, I know where not to trade tomorrow. Stay away from the middle and don't buy high and don't sell low, right? Let's break this down here on crude oil. First of all, we can see there was a strong move up to finish last week. If you recall, last Friday ended on a very, very high note. But you can see ever since then, though, they've really struggled to keep the market moving higher. With that, moving average starts to flatten out. We get a bunch of overlapping candlesticks. For all you volume profile theorists out there, a volume profile on this would look like this, right? Most of your volume piled up right around, oh, well, looky there, big round number, $52 a barrel. So we're definitely starting to go sideways here. We got some double tops, we got some double bottoms. We had a range day in our trading this morning. Pretty slow, as you saw. A lot of markets were slower today. But remember, right, just because the markets are slow does not mean that you can't make a buck or two on these slow sessions. I think slow markets are easier because you get a lot of people that make mistakes. You know, the hardest thing about being a trader is following your rules for a long period of time, right? Anybody can follow a plan of attack for a few minutes. But when things don't move very quickly, most human beings, they get restless. You know, they start manufacturing trades. They go on Twitter or Facebook and they get distracted and they make mistakes, right? So don't let these small markets, I keep hearing everybody complain about these little slow markets right now. What's the problem? Yes, you do have to stay a little more patient, and yes, you're not going to have that white-knuckled, gambling, right, feeling that we get when the market moves fast, but there's a lot of money to be made in these if you can keep your emotions under control because your competition is probably not going to be as disciplined as you are. So, first things first, bull bias, right? Bull bias, bull market going into the range, right? It's overall a bull trend in the market overall. With that said, that tells me buying below the low will continue to be my most desirable trade, right? I don't want to sell into that low. I don't want to buy into the high. I want to buy low, sell high, and avoid the middle. I know where not to trade tomorrow. Stay away from the middle and don't buy into the high and don't sell into that low. As a real easy kind of illustration for you, again, we get a bull bias to this, so bullish, right? Bullish over bearish here until something changes. But the bottom line is you want to think about failures in the 2-try rule. What you really want to do is you want to get out of this range. Stay away from the range, right? Get out of the range. Get out of the range. And again, I'm going to go neutral right now. But again, tomorrow, bull bias, right? 1 try, 2 try, back down in. 1 try, 2 try, back up in, right? Let the buyers try once, twice, and then sell it back down in. Let those sellers try once, twice, and then buy it back in. Now, just a word of advice about this 2-try rule. Markets are fractal. So you're going to see examples of small little 2-try rules and larger 2-try rules. Your job tomorrow will be to use a combination of the short-term 2-try rules for the actual entry triggers, right? But the long-term 2-try rule for the entry timing. If you're a client of mine, I think you know what I'm talking about, and we'll plan that, right, and trade our plan tomorrow morning. So strong move up, right? Strong move up. There's your range. We get our 1 try, 2 try, and then back up in. We already got, it looks like at the top of that range there. So I would imagine rotation, low to high, high back to low. I want to get 1, 2, and back up in. Right now, looking to buy this market, going back up into that range. What do we do at the highs? Again, we're bullish, so I'd rather be a buyer, but 1 try, 2 try, and back down in, right? So 1 try, 2 try, back up, ready to be a buyer. Just don't buy into the middle and don't buy into the high. Up at the top, 1 try, 2 try, and back down in. If we've learned one thing on this newsletter over the past few weeks, do you remember that breakdown out of the range on the S&P last week? Remember how strong that move was, right? Last week we had a range on the S&P, and this thing torched lower. But that was only 1 try. It couldn't hold that second try, and it came right back up in, right? So don't be spooked if it makes a run overnight, right? We could be going down just to pick the pockets of anyone holding stops down here, and this could end up going 1 try, 2 try, and then right back up in. So don't get spooked if the market really knifes its way lower or higher here, right? It's a range until proven otherwise. Oh, by the way, what does otherwise? How does it break out? How do we turn from a range into a trend? Well, we look for the 2 try rule to fail. 1 try, 2 try, fail. Well, what if that second try kept going? Yeah, now you're talking. If I see that second try, right, 1 try, 2 try, and instead of seeing it sink back down into that range, we see buyers jumping all over it. As long as we see price acceptance through that 5230, then we know we have a successful range breakout. It's not just to the highs. It could also be the lows. 1 try, 2 try. See that, what I call strength, pullback, strength, right? These are the 3 rules to a trend reversal, which I consistently talk about on this nightly newsletter, right? And then, of course, we do see that. Then we can go looking for, right, that 51.29. And then prior week, where was it? Yep, 50.87. That'll be a big milestone for those bears tomorrow if they can take control. For the bulls tomorrow, the bulls want, again, if they can take control, they want to get back to 52.30 and then try to hold that runner up that prior week high at 52.63. Where don't I want to trade tomorrow? I don't want to buy the high, I don't want to sell the low, and I don't want to trade the middle. Everything else is fair game. And by knowing where not to be trading, right, at least the theme of tonight's newsletter is we're gonna box in, right, where we can be trading for tomorrow. Let's keep rolling. How about some S&P? The Emini is quite bearish with an overshoot of the channel low. Yeah, that's right. I said it. We're bearish on the S&P right now. Do not adjust your television sets, kids. This tells me the market went a little bit too far too fast, right? This overshoot at the low. And I'll tell you right now, I do not want to sell down here, so my best option is to stay patient and find selling opportunities up in the battle zone tomorrow morning. Once again, I know where not to trade tomorrow. I don't want to trade below the low of a bear channel, right, unless I see some more consistency going lower, right? I don't want to trade into Friday's low because that's probably going to be the objective for the sellers. So this is a hard place to sell. So I'm going to stay patient for the opportunity to sell high anytime I find myself in a position where I can only sell low. I don't want to sell low. I want to sell high, and I do that up around resistance levels overhead, right? I do that up around that battle zone, using that double down, top of that channel, right, for tomorrow's session. Now, you know what I'm going to say next, right? This could just be a very deep pullback in what has been a seemingly just perma-bull market over the past few years. So I'm going to go out there and just say it right now. This could be just a deep pullback in a bullish trend, right? So let me finish your sentence right now by saying, but, yes, I agree. This could easily be a deep pullback, right? However, right now, trade what you see, not what you think. And what do you see on this chart? I know. On a daily chart, it's a small pullback. I know. The 4-hour chart, it looks like a pullback. I get that. I don't trade daily charts. I'm a day trader. Okay, neither should you if you're a day trader. Right now, what is the daily trend right now? Because that's all that really matters. Okay, turn off the weekly charts, right? Turn off CNBC. What do you see right now on the chart? Okay, and if you've been watching my newsletter for the past few days, few weeks, few months, I think you can see by now that all we really need is what's right in front of me right now. Today's information. I don't even have to look back in time at all. I can just use what's happening right now. Give me 24 hours of data. Give me a moving average. Give me some prior weekly and monthly highs, and that's all you really need. I'll take care of the rest. Oh yeah. You probably want a computer and the internet as well. The bottom line is this is a bear market. The one thing, though, that spooks me is the fact that we couldn't get back down to Friday's low. With all this hoopla to the downside, you couldn't go back to Friday's low? Even with this big, humongous green blob up there? You know, remember, big candles are easy to give back because they create like a vacuum, right? There's no volume here, so it'll just collapse back down. So that's a big spook, right? One big spook, and the potential for this turning bullish with the fact that they barely missed Friday's low. What's up with that, right? Easy pickings, that Friday low, but they couldn't get the job done. Yeah, they got the triple down target, right, but they couldn't get the Friday's low. Big problem there. Second thing is the overshoot of that channel. I tried to make this channel fit. I tried to make it fit. You'll see the Nasdaq in a moment. On the Nasdaq's a really good example of how the channel does fit. This is an overshoot though. And anytime we see an overshoot, the amount of the overshoot is the amount of the overshoot. Sometimes we get overshoots, undershoots. In this particular example, I would expect to get an overshoot. So that has me looking now anywhere from this untested reversal line all the way down to this double down. That has me looking now for that as resistance here, right? So now I know we've gone a little bit too far, too fast. Think of that pendulum swing now, right? Swinging back up in the opposite direction, right? Pendulum swings, right? And then back down we go. Now, I'm expecting there are going to be some buyers who want to call this bottom right now. I'm also expecting those buyers are going to use stop losses. And if those stops get run tomorrow, it should quickly sink right back down to that low. What's the plan? Your main goal for tomorrow, at least my main goal for tomorrow, is get above the moving average. Get above the moving average, because once we get above the moving average, you know what's going to happen. Wrapping things up here tonight. I hope you learned a ton on this nightly newsletter. I hope you're enjoying these new psychology videos. I'm posting my blog right now on my YouTube channel. If you haven't seen those yet, check out my YouTube channel or my blog here at Sideways Markets. If you're watching the video right now on our YouTube channel, there's a link in the description of that YouTube video. Follow that link. Come join me here on the blog or on the website at schooloftrade.com. Make sure you join our free trial. I'll shoot you out a free pass to attend our trade room. Make sure you grab that free trial. I think it's the best in the business. I'm a little bit biased, right? But I think it's the best in the business. And don't forget, while you're here, grab a copy of our beginner, intermediate, and advanced classes. Don't forget, we got some great flexible payment options available for our advanced membership. It's a membership that never expires. It's all inclusive, right? No more getting nickeled and dimed, right, in your trade room. And don't forget, right, I've always got some live support here. If you have any questions along the way, hit me up on live support on the right-hand side of the website. You better get geared up for the World Series. You better have that Halloween costume picked out. It is only a few days away, and you don't want to be that guy or gal digging into the bargain basement at a local Halloween store, right? So, right, and none of these wimpy costumes, right? Make sure you do it up right this year, right? And send me a picture on Facebook. Guys and gals, what a great day we've had today so far. Hope you learned something. Hope you earned something tomorrow with it. And don't forget, I'll be here tomorrow morning, 8 o'clock Eastern time, and we're going to do it with all of our clients in our trading tomorrow. If not, I'll see you tomorrow on our nightly newsletter, same time, same place. You guys be there, be well, be nice to each other, and be here next time. Adios, amigos. Bye for now.